External rating and billing calculation engines pump a high-speed, continuous stream of transactional data into the FI-CA subledger. Every single one of those transactions carries a strict compliance requirement. The system must automatically calculate the correct tax and assign it to the precise general ledger account. Standard SAP FI processes determine tax directly from master data. In FI-CA's high-volume environment, that direct mapping creates performance bottlenecks that can stall processing. To bypass this, FI-CA utilizes a multi-step architecture to derive tax properties indirectly through a series of intermediate translations. Managing this data flow requires a specific sequence that separates the initial transaction processing from the final tax calculation. The starting point is the business transaction itself, represented by main transaction 6000 and subtransaction 0020. We also pull mandatory parameters from the contract account, specifically company code and account determination ID. These distinct data points converge to initiate the automated processing sequence. On its own, the raw business transaction contains no tax rules. It merely provides the initial coordinates the system needs to begin the search. We trace those coordinates into the account determination phase. This process yields its first major output, locating the sales revenue general ledger account. Simultaneously, it generates a second output, the FI-CA-specific tax determination code, labeled here as Y2. This Y2 code is an internal FI-CA construct. The standard general ledger cannot read or process it directly. Account determination successfully solves the revenue routing, but leaves us with a translation requirement to finalize the tax routing. That translation occurs in Table TE011. This matrix connects the FI-CA internal code to the requirements of the FI general ledger. To function, TE011 takes the internal tax determination code, Y2, and cross-references it with the country code derived from the company code. It evaluates these inputs against a specific validity date. TE011 then outputs the translation, the standard FI sales and purchases tax code, shown here as A1. This setup simplifies long-term maintenance. If a government changes a tax rate, consultants only need to add a new date interval row in TE011, rather than altering millions of core transaction mappings. By isolating tax logic from billing data, TE011 allows the system to adapt to new legal requirements without modifying the underlying transaction history. We trace the newly translated FI tax code out of TE011 and into its final destination, posting area 0010. Posting area 0010 takes the FI tax code, the company code, and the tax transaction type to pinpoint the exact general ledger tax account. This is the moment the actual mathematical tax rate, like 19%, is finally applied to the base amount of the transaction. This final posting area officially bridges the subledger's automated calculation sequence with the general ledger's compliance requirements. This architecture decouples the initial business transaction logic from the final general ledger tax configurations. Revenue account determination yields the internal FI-CA code, TE01, translates it based on country and date, and area 0010 finalizes the GL routing. Mastering this chain of custody empowers solution architects to troubleshoot output discrepancies and manage global tax shifts within enterprise-scale SAP BRIM landscapes.